All right, all right. Good day, live room members. How are you guys doing? Oh, looks like you can't hear my microphone. Hold on. Live room members, can you hear me? Doing? Looks like you can't hear my microphone. I think YouTube can. Give me a second. Can you hear me? No. All right, give me 1 second. I'm not good at running multiple things at once. Let's see how we can do this. Boom. Check, check, 1, 2. There you go. Now you guys can hear me. Live room members, can you hear me? Give me a yes if you can. People watching over on, what is this? YouTube, Google, whatever it is. Can you guys hear me? Give me a yes. Perfect. Perfect. Well, welcome to the Trade and Power New York live trading room. For you guys that are watching on the interwebs, this is a live broadcast that we do Tuesday through Friday, where we do some live trading in the markets. And today we wanted to do something different. As you know, or maybe you don't know, and if you don't, you do now. This is Jobs Friday, and you can sort of see live room members. You can see it. YouTubers, you can see it right now in the front of your screen. This is the biggest consistent news release that we have in the markets. We have a handful of news events coming out at 8:30 New York time. We're going to have the unemployment rate. We've got the change in non-farms. We've got hourly wages. And essentially what happens is we see the market typically explode, go crazy. It shoots up, it shoots down, it shoots left, it shoots right. And it's just not an environment that you want to be trading during. Now, I always get the question. I have attempted to trade non-farms in the past. I've got very lucky sometimes. I've gotten very unlucky sometimes. And from my experience, there's no consistent way to trade it. Even if you're doing like the closest I came was a bracketing technique, where I tried to have a buy stop above, a sell stop below, and whichever way the breakout went, I would try to get involved. So in my opinion, there's no point, kind of like the Brexit situation. There's no point in trying to guess which way the market's going to go. The best thing you can do is kind of sit on the sidelines and just, grab some popcorn and watch the show. Now, if you remember last month's non-farm was the crazy insane one. We had a number of 38,000 jobs. Typically, we need about 150 just to stay normal. That's usually the range that we look for. So anything you can, in general, always think, hey, if it's under 150, bad. If it's over 150, good. We were at 38, which really shocked the market. I don't expect to see that again. I should say this. It's saying that we're not expected to see that again. I have no idea what's going to happen. I don't control it. But we do have some stuff. The Verizon strike is over. So that's going to add about, 35,000 jobs back. So we'll see what happens. I was doing some reading on the event going into today, because I'm always, stuff like this always confuses me. I'm a big, conspiracy theorist, where I believe that numbers are put out to make us think what the upper powers want us to think, so that we'll react in their favor and they can profit off of us. And it's always weird when you see like the unemployment rate go down and you see the jobs number go down. It's like, well, how are both happening? And, the thing about the unemployment rate is a lot of it isn't caused by people not actually being unemployed, but it's people giving up looking for jobs, meaning that I was on unemployment once in my life. After you've given up actively searching for a job, you no longer count. So you can technically be unemployed, but not count as being unemployed. And there's a cool new, a measure that came out called the U6, if I remember correctly. I think it's called the U6, where it's basically the unemployment rate, which kind of takes into account people that are discouraged and no longer looking for jobs. It also takes into account part-time workers that are looking for full-time employment. So again, I don't know much about it. The fundamental side is by far the weakest side of my trading, but I try to learn. I found that to be pretty interesting as far as a way to get a more accurate number of what is actually going on in our job market. Another thing to pay attention to, you can see on the screen in front of you, it's got a little green dash next to it. It should be higher than that, but average hourly earnings is really important as well. So we'll see what happens. Typically going into events like this, you would assume that a good number would mean a good reaction, right? Most people would assume that, oh, the good number means the economy is doing good, which means this is going to happen and that's going to happen. And interest rates may be back on the table for 2017. It's not always that simple. Trust me. And that's one of the difficult things about being a fundamental trader. It's not necessarily the number that comes out. It's what the public anticipated, and it's really the reaction to it. And what I found over my years of trading is that people come into the market, the traders, we call it a market because the market is sort of a living, breathing organism. The market already has an idea of what it wants to do. The market has already made up its decision or its mind on whether it wants to be strong to dollar, whether it wants to be weak to dollar. And the news is really going to play one of two factors. If the underlying sentiment is that we want to be strong to dollar and we get a good non-farms number come out, we're probably going to see a bullish rush in the dollar, right? It's going to kind of, what's the word I'm looking for, where you, someone thinks something and someone else thinks the same thing. Kind of help me out, guys. I'm a trader, not an English speaker or a professor. Kind of confirms it, I guess. Kind of confirms what their thoughts already were. On the other hand, if it's bad, yet the overall sentiment was already, hey, bullish, 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 the market will sometimes tend to wipe it off and be like, well, it's bad, but it's because of this or this and that, and just use it as an excuse. So again, that's what I found in my experience. So essentially what we're going to do here in the live room, we're going to hang out. I'll bring some charts up. We can look at something. Live room members, if you have a pair you want to take a look at, let me know. We'll look at some charts. We'll hang out until the 8:30 news event happens. And my plan for today was just to do a lot of Q&A. We'll take our normal war room break at 8:30, guys. You can check out what Charles is doing. He just got short dollar Canada, 2618 trade, along with Aussie Canada this morning. So you can check out what Charles is looking at. And that'll give me time for you guys that are asking questions here on YouTube, because I apologize, but I'm going to ignore you guys because I'm just not good with multitasking. So I'm not going to be able to see most of what you type in. But during that war room break, our syndicate war room break, I'll head over to the YouTube deal. And if there are any questions that you guys want to ask, I will address them. Lax says, boom, target one's hit on cable. Well done, Lax. Moving stops to 29.73. Ian's double watching me on YouTube. Is it because of my pretty face, Ian? All right. So let me know, guys. You want to take a look at any pairs in particular? Do you have any questions? We got about 20 minutes to kill. So let's start killing those 20 minutes. Ian says yes. Is it good to straddle the event? And you know what? This is what I used to try this. This was, again, for you guys that are new to me. I've been trading Forex since 2008. And just like you guys, right? Just like you guys, I've essentially took the same path as you. I started off by, trying to do it myself. When that didn't work, I would go to the internet and I would YouTube search this and Google search that and just spend days and days and days trying to find all the information I could on Forex. I was in that unconscious incompetence type of stage in my trade. And what happened was I had no idea what the non-farm payroll was. And one day I'm trading it. And for some reason, I probably closed my eyes and just pushed it. I got long like the euro dollar, for example. And then the non-farms came out. I was, I went away for the day. I came back and I'm like, 300 pip move. Who's the man? Who's the man? I'm beating my chest like, I'm the man. Look at that 300 pip move. I can do this all day. And then eventually I found out what it was. And then I tried it the next time, and next time, boom, 300 pip move in the opposite direction. But I really started trying to get an idea on how to trade the non-farms. Because one of my ideas was like, okay, well, all I have to do is trade once a month. And if I can nail this event, I can make enough money one day a month to, live comfortably and party on private islands the rest of my times. The thoughts we all have, the get rich. This is when I was still in my get rich quick kind of kind of mood. But I ended up trying a lot of different strategies. And one of the strategies that I came to was really kind of straddling, or what I like to call bracketing the market. I just want to make sure I switch to my right screen. I've got like a million screens up for you guys. There we go. One of the techniques I tried was bracketing the market. So say this is the current candle before the non-farm report comes out at 8:30. What I would do is up here, I would put a sell stop order. Now, is anyone, or a buy stop, is anyone not familiar with a buy stop? You know, for you guys that are with us at Trade Empowered, most of the time we talk about using limit orders. Is anyone not familiar with a buy stop, guys? Live room members? Yes, Jeff. I will close all open positions before the non-farms. Yeah. Only exception would be if I'm trailing like a target 2 on a really big swing trade, something like a couple years ago I was in a dollar Canada trade for like what seemed like a month, waiting for target 2s. It was a trend following trade, something like that, where we were already like 300 pips in profit, so there was no fear of the non-farms coming down and taking me out for break even or giving me any slippage. But normal positions like my current dollar Canada short, that's going to get in 3 minutes, that's going to get closed. The New Zealand dollar trade I have on is going to get closed in 3 minutes as well. So I'll be all flat going in. Second targets on pound yen, if that wasn't hit yet, that'll be closed as well. But yeah. And I see a question: how to mix technical analysis with fundamentals. I wouldn't try to do that at all. You want to have you want your philosophy to be one or the other. But I would do this. I would bracket the market. I would put a buy stop above. I would put a sell stop below. And what this means is, when you're stopped into the market, it doesn't mean stopped out, meaning losing money. A stop is just a different way of entering the market. This would essentially mean if price action went up, I would get filled long. If price action went down, I would get filled short. And this is a very similar strategy to that we've talked about before with the inside bar strategy, if you guys remember that, where you're waiting for a breakout. And in my mind, it was the greatest idea ever, because I'm like, well, this is perfect. I don't have to guess the breakout. I don't have to guess the breakout. If it goes up, I'll just be filled up and I'll already have my stop order. If it goes down, I'll be filled bearish and I already have my stop order. This is perfect, 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 perfect. And before I go into what actually happened, yes, Remy, the non-farm is 8:30. I'll close out 15 minutes before. Before I go into what actually happened, can you guys take a guess at what happened when I actually tried to do this live? Any guesses? I'm looking to fade any impulsive moves, any tips. Nope. My tip is stay away from the markets. Don't become a gambler. Or at least wait for a pullback or something. Yeah, what happens is the market moves so quick. Hold on, Charles hit me on the trade floor real quick. What are you saying, Charles? Gotcha. Okay. The market moves so quick that what happened is, although my buy stop is here, right? Slippage occurs because, again, when you have an order in, your order doesn't mean, when you have an order in the market, it doesn't guarantee that you get filled at that area. I hope you guys understand that. If that's new to you, write this down. Your order on the chart does not guarantee you a placement. Think of it as like a placeholder in line. So if I put a buy stop here at 129.70, that's telling my broker, hey, this is where I would like to get into the market at 129.70. Now, if there are 50,000 other orders in front of me, right, at 129.70, chances are I may not get filled directly, right? Because all those other orders have to get processed first. So in those split little milliseconds, those seconds that it takes to get my order executed, especially during high volatility news events like today, the market, I may not get filled till up here, right? So if I'm shooting for a target, let's say up here originally, let's say something like that, here's my potential reward. And then we're just making up examples here, guys. So don't go out here and trade this seriously. Disclaimer, right? Don't listen to anything I say. Trade your plan, right? Let's say I have an initial risk reward like this, more than a 1-to-1. When I actually get filled the market, it actually ends up being more like this because I get slipped all the way up there, which puts my risk all the way up here. And then sometimes you'll get slipped here. By the time you get filled, the market reverses and goes back down. And then and it's just, it works in your mind. It works when you're back testing it and you're looking at charts that aren't moving. It doesn't work so great when the markets are in actual motion because of that slippage. You may get filled, 10, 20 pips past what you originally thought. And that's going to do wonders, or whatever the opposite of wonders is to your risk reward. And if you've ever watched the non-farms, you often get a lot of whipsaw, which means the market spikes up, it spikes down. So you may spike up, get filled here. Before you know it, the market reversed already. Now you're stopped out. Now you try to revenge trade and get back in short because the market's moving short and then it bounces back out. And now you're stopped out on your short. And now you just took a loss on the way up. You took a loss on the way down and you're just scrambling. And that's why I say, hey, the best thing you can do, and I'm going to close out dollar Canada now for -8 on here, and New Zealand dollar as well. The best thing you can do is stay away. Yeah, Chris says it's a bad idea because it happens really, really quick. Over on YouTube, I get a question that said, I have open positions on pound Aussie, pound Canada, Euro Swiss, all long and in profit with the payroll numbers. Will the payroll numbers affect them? It could. There's often a ripple. Yeah, I know YouTube is delayed about 20 seconds. There's often a ripple effect in the market, especially when you're dealing with some of the more popular pairs, more of the safe haven pairs, such as the dollar. It may not affect those pairs as much as it will affect the dollar pair, euro dollar, pound dollar, stuff like that. But there is a ripple effect because people are moving money from somewhere. That's why you see correlations between different markets as well. You see gold and the dollars, you see the stock market and the currency market. People are typically moving money from one instrument to another. So you do see a ripple down effect. Can I guarantee it's going to happen? I have no idea. We never know. But I have been a part of it during times where I'm trading Aussie yen and Aussie yen moves. I'm like, why the heck is Aussie yen moving off this dollar news? So I stay away from everything. Call me safe. Call me a punk. My number one rule of trading is what? Live remembers, what is the number one rule of trading? Don't go broke. What's that? Yeah, don't go broke. What's another way of saying that? The fancy way, the way that makes us sound smart. Capital preservation, yeah. Preserve your capital, AKA don't go broke for you guys of low vocabulary skills like myself. Don't go broke. Oops, spilling coffee all over the place. Guess what? If you don't have any money in the market during a non-farm payroll, what can't happen? Right? If you don't have any market if you don't have any money in the market during a non-farm, what can't happen? You can't lose money. You can't lose money. You can't go broke. You can't go broke. You can still trade. And all we need is a chip in the chair. That's all we need. However, that's not the mindset that most people have. Most traders have the mindset of, oh, Akil, it's not about not going broke. I want to make as much money as I can really, really, really fast. And you hear the stories about people making 50% returns a day and 100% returns a month every month, right? And then those people go quiet. And you know why those people go quiet? Because they eventually go broke, right? Reckless trading, mismanagement of position sizing, two easy ways to go broke. And you can do well for a while. Again, when things are good, everyone's doing good, right? For you guys that have ever traded in the stock market, right? There are times where you can close your eyes and just buy anything, right? And you're gold. We had that, a couple of years ago. You can buy anything you want. Close your eyes and pick it. You would have made money. But trading is a marathon. Trading isn't about who's going to make it from day to day, month to month. It's about who's going to make it from year to year. Who's going to make it 10 years? Who's going to make it 20 years? And I can't even explain. Got about 10 minutes before this news comes out. It hurts my heart. I've spoken to so many traders that have, taken their accounts from like $20,000 to $50,000 in a few years. And then guess what? hit a rough patch and blew everything. And that should never happen. That should never happen. But it does. And I think the problem is the internet, and there's just so many salespeople, so many scammy salespeople, let's put it that way, on the internet that are selling you this big dream. And, oh, it's so easy. You can do this and you can do that. And they get you all excited. And that's how I got sucked into Forex. I wouldn't have started trading Forex if I didn't think I can make a lot of money really quick. And it gives you inflated expectations. And then you go ahead and you think, well, I'm good. I can do that. If he's doing it, I can do it too. And then you start doing it and you find out it's harder than it is. But now you're caught in the moment. You're gambling. And it's kind of like golf, right? You trade bad for a little bit. And every once in a while you hit that good trade and you're like, oh, yeah, this is it. This is my turnaround point. And then you slowly bleed. Most traders don't just blow their accounts. You get your 10, 20% of traders will blow their accounts right away. Most traders, we slowly bleed out, meaning your account slowly goes down, down, down. You get a little bit of up movement, down, 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 and you bleed out over the years. And that's it's a tough, painful way to go. I'd probably rather blow my account on one trade and just, be like, well, I'm bad. I can't do this. But again, it's for you guys that are golfers out there. It's like golf. You stink for 17 holes and then you get that one birdie at the end and you're like, yes. So what? My score was 110. I got that one birdie. Next time I'll get all birdies. Right? Chris says my account is trend continuation mode. That's what I'm talking about, Chris. Ian says, was using a system which didn't use, oh man. I was using a system which didn't use stops and I had to go out and didn't cancel his positions. Oh man. Yeah. I didn't use it. Maybe I did. I'm thinking back to when I first started trading. I don't think I knew what a stop loss was, Ian. I was kind of under the same thing. I would place a trade and then I would just hold on. This was why I was the demo king, guys. I was the best demo trader you ever seen. It was so easy, right? It was so easy for my demo account, right? I would place a trade and I would just hold it until it was in profit. So sometimes it was a couple hours, sometimes it was a couple days. I would hold it until it was in profit. And I'd be like, yep, this guy's good. Live money, you can't do that. There's something called margin call where they'll shut you down if the market goes too far against you. Learn that the hard way too. You get a nice little bill in the mail. Oh man. Trading, man, it's tough. It's tough. Jeff says, I feel as if I would be going outside my plan to close up my position. Do you recommend going back to my testing and looking for non-farm days? I don't, Jeff. I mean, you can kind of tell what days are non-farms. Obviously, they're not this one, but for the 90% of the time, they're every first Friday. And you can tell by the size of the candles, but I don't think you need to do that. Unless, maybe are you talking swing trading or day trading, Jeff? If I missed your question, guys, in the live room, just type it again. Swing trading, you can. I think it's worth it if you're swing trading. I think it is worth it. If you're day trading, it's not worth it. If you're swing trading, it's worth it. It's worth it because you may have some longer term moves that were moved to either stopped out or targets based on it. It's the New Zealand dollar bat. Yeah, Kiwi dollar. We've been waiting for that bat for a while now. Let me go ahead and put it on the screen for you guys. Let's see if perfect chance to use. There we go. We can show off our new pattern assistant tool once I put it on here. Let's go to the 4 hour. We've been waiting on this for what seems like forever. Let's put in too many indicators. Pattern assistant. Perfect. Swing high to swing low. X to A. A to B. B to C. CD completion right up there. Akil is 500 euros, 500 pounds a good starting budget trade. You could start with anything. A lot of brokers now offer micro. A lot of brokers now offer micro accounts. You can trade micro lots. So you can start trading with 10 cent or whatever the equivalent would be of 10 cent a pip. Now, if you're looking to say, hey, is that enough to really start making money and start, taking hours off from my job? Not at all. Not at all. You're not going to make any, I don't like saying serious money. But if you're thinking about, hey, is that enough? I can start and quit my account and live the life of my dreams and travel the world? Not at all. The price point, I always say, if you want to be a full-time trader and have no supplemental income or anything like that, you need about $250,000, $200,000. That way you can trade a very conservative position size. You don't have to worry about earning enough to pay the month-to-month bills, which is a big issue. That's a part that many traders overlook. Not only the added pressure, but during those weeks and months of drawdown, remember, you're still, if you're living off of trading, you're still taking money out that account. People forget about that. It's all good when hey, I made, $2,000 or $5,000 worth of profit this month, and I'll take $2,000 out to pay for the mortgage and the car or something like that. That's all good. What about when you lose, $3,000 that month? Well, now you still got to take that $2,000 out to pay for the mortgage and car. So now that $3,000 loss is really a $5,000 loss. What I would worry about, Luke, is just learning how to trade. We like to preach something called process over outcome, where we're not worried about money, right? We're not saying, oh, we need to make this much, I want to make that much. Even we're not worried about pips. Process over outcome, right? The one thing that matters is that you consistently trade and execute your plan, right? You have a plan that is testable, verifiable, and repeatable. It's been back tested to ensure that it has a positive expectancy. And then you need your ability to execute that plan. War Room is going live early. Okay, well, syndicate members, head over to War Room. I'm going to keep talking because we have a lot of people watching on YouTube, and just, 2 minutes and get your popcorn ready. When you guys are back, I'll still be talking. But this will give me a chance to answer some of the YouTube questions that are coming in. So head over to War Room, syndicate members. If you're not in the syndicate, check it out. It's $1 for the first month. If you're not willing to invest $1 in yourself, then probably not too serious about your trading, but gives you a chance to see how we trade on a regular basis. Kind of the reality of trading, I like to say. You get to see the really good times, the times where we're making 20% returns, and you get to see the really bad times like this week where I start off going 0 for 7 in the markets, and kind of see how you mentally deal with that and how you bounce back for it. And I think that's very important, because it's not all trading isn't all unicorns and rainbows, as I said earlier in the week, right? It's not all good. There are bad times. And what makes a true trader is, anyone can do good during the good times, right? It's who can survive the bad times and who can fight through them and who can be consistent and continue on their ways. So I'll see you guys when War Room is over. I'm going to keep talking, and let's see what any questions we have. Gold is rushing, up or down? Please tell me up. I see someone saying gold is rushing, up or down. Hey, Tim. Thanks to you guys, I made 458% return on investment in 5 months. Holy cow. Do you manage money? If so, I've got something to throw at you. You're not going to tell me about, you're going to make me look at gold myself. I've got an investment in gold, let's put it that way. What is gold doing? All right, 8:30. Let's see what's happening, gang. Usually I put the news on. Looks like we're getting dollar strength, so my guess is a good number. Payrolls rise 287,000. That is big. Jobless rate rises to 4.9. 287,000. Wow. Versus an expected 180K. That is a massive number. That is a massive number. And we're seeing reaction in the market. Let's go, here, I'll go over to a euro dollar in a 15-minute chart. You can kind of see the reaction off of this. Hey, what happened to my euro dollar? Pound dollar? What is gold doing here? Gold, figured that. Well, we're coming back down for you guys. We were watching gold yesterday. I forgot who was in the live room. We're coming back down to that flag, that pennant formation. So that may give you that buying opportunity you're looking for. All right, so good number, good number. Danny says, I shorted against all euro pairs 3 days ago. Well done, Danny. Let me ask you this first. Was it part of your plan or was this an impulse decision to do so? Before I say good job. You guys know how I judge good and bad job. Yeah. Was it part of your plan? Are you sure? There were trade setups that were in your plan that were testable, verifiable, and repeatable. Or did you just say, I feel like I got a feeling in my bone? No. So did I take my good job back then? Sorry. I am very happy for your profits. Don't get me wrong. Very happy for your profits, but I am sad and disappointed that you deviated from your plan. That's not the way to be consistently profitable. So happy for the profits, but not happy for the execution, not happy for the process here. Not happy for the process. Look at that. Pound dollar traders, you got a cipher coming in. Swing low to swing high, X to A to B, B to C, CD completion. Look at that. Non-farm reaction came right into a bear cipher or a bullish cipher formation right here on the pound dollar. Funny how stuff like that happens, right? Yeah, I'm not watching War Room, guys. I'm sorry. To be honest, it was somewhat of an aggressive CC. Somewhat. That's another word we don't want to hear. But I know what you mean about being consistent. I've never. Yeah. So I can't congratulate you, Danny. I'm sorry. Again, I know it for you guys that are. If this is your first time joining me, it sounds harsh when I say stuff like that. But we just talked about it, right? Trading is a marathon. It's not a sprint. It's about who's going to consistently execute their plan. Anybody can have a good stretch. Every trader has probably had a good stretch, but taking actions that deviate from your plan, it's only gonna kill you in the long run. It's only gonna kill you in the long run. Charles, no sound. Hopefully he sees that. He's probably in the zone. Breakout and retest. You see, hey, look, you see this, guys. For you guys that are familiar with the cipher formation, right? Right in front of you. Came down right to it. Now, look, I'm not saying, again, you guys heard my opinion. Don't trade during the non-farms, right? But a good example of how these advanced pattern formations still work. And, we're not going to get in discussion of fundamentals versus technicals because that always ends in a bloodbath. But I'm a big believer in that the technicals rule. That the technicals are the destination. Fundamentals will help you get there faster or slower. But you see this time in and time out. You see levels of structure. You see advanced pattern formations hold after fundamental events. And you guys can also see kind of the example I told you about how the market kind of spikes down and spikes back up. So for someone that got slipped, someone trying to play this breakout, maybe they had an order right here, right? Maybe they actually got filled down here, and then the market reverses against them, and it's really hard to do that. Now, if you want to see a better view of this, For you guys that have access to range bar charts, one of our transformation members, never happier being flat for the week now. If you want to see a better view of what price action inside this big bar looks like, man, my range bars aren't working today. Sorry about that, guys. Well, I was going to say go down to a range bar chart, but probably because I got 80 million things running at the same time, my computer doesn't like me. Lucas says, do you also trade live and live streams? No. We do our live trading room. So we do the regular screen share and chat form that we have here, but not the stuff that I'm doing on YouTube. That's different for today because, again, it's a non-farm payroll day. I have zero interest in trading. So it's a time to do some Q&A, especially for the members that our viewers, our subscribers on YouTube, a chance to come in and ask you some questions. If you guys aren't subscribed, feel free to hit that subscribe button. We're all going to be posting our videos on this site from now on, meaning myself, Charles Miles, Jason Stapleton, of course, and Jason Greystone. So make sure you're subscribed to this YouTube page. There's going to be a lot of content coming during the week. Probably a video or some type of content once every few days. So you want to make sure you're locked in. You want to make sure that you're not missing it out. No, this is live on YouTube. Yeah, Danny. Chris says dollar yen, 1 hour Gartley hit 38 pips. Yep. Yeah, we're broadcasting live on YouTube right now. All right. What is the movement of gold? Gold is taking a hit. Gold is coming down. We've got a consolidation pattern on gold. I'll show you guys in a second. Hold on. Let me load it up. We talked about gold yesterday here in the live room. There were two areas of consolidation we were looking at. There was a kind of the first level, minor level, and there's a major level. We're sinking down into the major level right now with gold. I'll show you guys. Hopefully it comes across the screen okay. Trading view gives me a little trouble here. But if we're looking at gold, you can see the higher high, higher close. You can kind of see the first area of consolidation here in blue. And then we've got this area of consolidation right now. So if we were to get down to this line right here, this red line on gold, I think this is a no-brainer buy. I may even call my broker up and see if I can get some more, if we can get a retest of that level. And again, it's all, guys, it's kind of like we talked about yesterday with, I think it was the euro pound. We're going through examples of that, but just look at the areas of support and resistance and where support becomes resistance, right? If you're tracking through with me and live room members, I'm gonna go restart the screen share real quick. So give me a second. I don't know why TradingView gets a little funky, but it does. Right, but let's put on our hats, right? We see our starting point down here, right? We have swing low to swing high. What is this? What is this area called right here? What do we call that, gang? This is for you too, YouTube. You can participate. I know we're on a delay, but you could participate. What's this area right here? New structure. New structure. Yep, new structure high right here, right? We then get this. What is this type of move called right here? I see someone on YouTube. Sorry, it's the opposite. Fundamental drive the market. Like I said, there's the ending debate between fundamentals and technicals. It's never going to end. For someone whose philosophy is grounded in technicals, they're going to think that technicals rule. For someone whose philosophy is grounded in fundamentals, they're going to think that fundamentals rule. I used to try and debate it and argue it, but it's just a different philosophy. It's like the whole chicken or the egg thing, So I don't even, I appreciate your opinion. I don't agree with you. That doesn't make you wrong. I would hope that you appreciate my opinion. You don't have to agree with me, and that doesn't make you wrong either. So what matters is that we can consistently do what we need to do in the market. And if that means trading fundamentals and reading reports and looking for longer term moves, I do think fundamentals, the longer you are, meaning when you go from trader to investor, is a big difference between trader and investor. If you guys don't understand that, type it in. If you're an investor, I think fundamentals are going to play a much bigger role because you're not a trader. We're more like mercenaries, guys, right? Traders were more like mercenaries. I don't care whether the market goes in or goes up or down, right? I don't really care. I don't have value in any specific currency. I don't have value in any specific stock, right? If the market goes down, I just want to know how can I get down with it, right? If the market's going up, I want to know how can I be involved in that rally. So we're mercenaries. We're in, we play for no team. We just want to make money. When you're an investor, it's a little bit different. It's kind of like you're taking a stake in the company. You're betting on long-term growth. You're valuing AT&T. Right? So I can see, I certainly, and I used to be a stock trader, so I know how fundamentals play a different role in investments. In trading, I just don't see it. But again, that's me. I have a technical bias. I'm going to think that way. If someone that has a fundamental bias, they're going to think the opposite, and that technicals are junk or technicals play a minor role. They work together because there are technical traders and fundamental traders. And the market is essentially a visual representation of the buying and selling that's happening. It's a visual representation of what we're all doing as traders. So it does encompass both of them. In my opinion, I don't really care which way you do it, but you want to be consistent in your approach. So if you're going to be a fundamental trader, right, you have your plan for how you evaluate fundamentals, how you trade based on that, and you stick to it. You don't start trying to do fancy things with the technicals this time and then fundamentals that time. If you're a technical trader, right, same thing. You don't start trying to guess news releases this time, but then go back to trading head and shoulder patterns next time, right? You have a plan. Your plan has an edge. You consistently execute that edge, and that's how you make it. That's how you make it. But as long as, yeah, I'm glad we can appreciate each other, Abdo, because so many people will try to rip my head off. Lax's long dollar yen 5-minute trend continuation. Do you think there'll be a little pullback on the euro dollar in an hour? I don't know. I can't. I have no idea what the euro dollar will do in what time. That's more of an options thing. Do you think this will happen in an hour? I don't know. We could take a look at euro dollar. I don't know if it's going to happen in an hour though. It could happen in 15 minutes. It could never happen. It could happen in 10 minutes. But back to gold, right? This move is called what, guys? Sorry, we got away from it a little bit. We have our new structure high. We followed it up with our what? Outside return, right? You can see we then put in a higher high, higher close, right? We break previous structure looking left, and then we come back, and guess what? Previous structure resistance, once broken, turns to what? Resistance turns to what? Resistance turns to what? Well done. Resistance turns to support. You guys are on it, right? And then you can see as we retest, look at this. Support, test it, held. Test it, held. Test it, held, right? Test it 3-4 times in here. 5 times if you count the initial resistance level before rallying up. What does that tell you about this level? Is this a level that you think we should deem as being somewhat important? Probably, right? Probably. Next question. Does that mean that the market must and will and has to reverse there? That's a problem a lot of us get into. It has to reverse there. It must. We get so locked in that it must do it. No, yeah, it doesn't. Yeah, we have no idea. But it does mean that that's a level that we should watch, a level that we should put on our radar. And if price action comes to this level, then we should have our game plan ready on how we're going to take advantage of that trade. And that's that whole if-then thought process. If price action returns to previous structure support, then I look for RSI to be oversold. If RSI is oversold, then I look for retested structure. If we get retested structure, then I look for bullish divergence. If I have bullish divergence, then I enter next bar market. If I enter next bar market, then stops go 1 ATR below the setup bar. That's called a trading plan, guys. You see how I'm not really thinking about it? I'm not really, well, it seems like it might reverse there. It smells like it might reverse there. It tastes like it might reverse there. I'm not doing any of that stuff. I'm not going off of any feelings. Oh, I got the feeling that gold's going to reverse. No, I'm sticking to a consistent plan. It's an if-then thought process, right? It's literally going through a checklist. Going through a checklist. All right. Did the market do this? Check. All right. What should I look for next? All right. Did the market do that? Yes. All right. Boom. Checklist. All right. Did the market do that? Boom. Checklist, checklist, checklist. And then when you get to the end, it says, okay, well, if all these things are checked off, then you enter the trade. And then guess what you do? You enter the trade. Right? It's robotic. It's as mechanical as we could be. Now, there's going to be some subjectivity to it because it is reading a price chart. So minor structure, it may be minor structure to someone, it may be major structure to somebody else. It could be a bullish trend on one time frame. A different trader could be looking at it on another time frame. It could be a bearish trend. So there is some subjectivity to it, and that's why you want to train your eyes to see what you see. I always say trade what you see, right? Trade your plan. Don't trade what anyone else sees. Train your eyes so you're comfortable with the way you see things and that you can consistently see the market and read the market the same way. And we try to make trading as simple as possible. Not easy. Not easy by any means. Very, 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 very difficult, especially the psychological side. Especially the psychological side. That's the biggest struggle. That's why we have traders in the live room here that come to get a little bit of support. But the execution wise, I mean, it's like any other skill. You practice hard enough, you'll get better at it. Is Warren still going on? Is he still rattling off? Can you tell Charles he sounds? I'm trying to do three things at once, guys. I'm not going to be able to communicate with Charles. It's just going to have to. It'll just have to sound bad today, I guess. He's had a good week. He's I know. Sounds messed up in the war room. I can't do anything about it, guys. What do you want for me to do? I'm trying to talk to you guys. I'm trying to talk to YouTube. Wave your magic wand. All right. What do you guys want me to tell Charles? Sound is still bad? They say sound is. Look at that. I was supposed to dig my feet in and I still gave in. All right. Where is it to test the red support level and buy it there? Stop loss have to be below structure. That's how I base stop losses, guys. Structure is the biggest part of my trading philosophy. So I always base stop losses off of structure. Some people use fibs. Some people use just you can set numbers. I always want to get below structure, below or above structure. So that's key in my trading philosophy, personally. Hey, Akil, we got a spike to the upside now on the Euro Swiss. Hey, we just talked about that. Look at that. How does that relate to non-farm? Again, it doesn't. It's like we talked about earlier. Ripple effect. Ripple effect. If money is going into somewhere, guess what? It's coming from somewhere else. That's how money works, right? Aside from the US government, which randomly prints money because we cheat, right? There's no new money. It always moves. If you're going to buy something, guess what? That money came from somewhere else. You're shifting that money, right? You go to buy a car, right? Jason Greystone just bought this nice Audi A7 yesterday. Mwah, beautiful, right? Beautiful. That money just didn't poof magically appear, right? He had to take it from a bank account and put it into the car. So if people are rushing, if you're trying to rush and flood to buy dollars, right? Where are you taking that money from? Probably other investments, right? You're liquidating some other assets or some other investments and you're using that money to buy the dollar. Right? It's all related. Again, that's just an example, but it's all a ripple effect, right? You throw a stone into the pond, right? The ripples go out and affect all the other areas. Remy says, look left, structure leaves clues. I hear it in my sleep from now the amount. Yep. I'm telling you, I used to hate that when I did my training. Look left, structure leaves clues, or swing high to swing low and back up. I used to hate it, but now I'm so robotic with it in my analysis that I love it. I curse myself out every time I say, I'm like, swing low to swing high and back up. Stupid Stapleton. Stinking Stapleton, locking that in my head. But I love it. It's the process, man. It allows me to see the chart so clear. Um, why don't you trade? Why don't I trade during ST non-farms? It's a gamble. It's a crapshoot. Um, if I'm a big craps fan, the gambling game. So if I'm gonna put my hard-earned money at risk where I don't have an edge in the market, and I have no way of saying that I have a better chance of winning or earning money versus losing money, I might as well just go to the casino and have some fun while I'm doing it. I don't want to put my hard-earned money at risk unless I have an edge in the market, meaning I'm involving myself at an area where it's proven that the chances of the market going in my direction are greater than the chances going against me, combined with the risk reward, of course. With the non-farms or big, like even like the Brexit mess, you have no idea what's happening. You're just closing your eyes and putting your money on the table and saying, well, I hope it works out. If I'm going to do that, I'll go to the casino. At least I'll have fun at the craps table, rolling some dice and cheering some people on. Trading's a business, man. This is not a hobby. It's not a game for me. Right? I don't want to come in here and blow money, right? I've got a wife. I've got a kid. We've got a car note. We've got a mortgage. We've got stuff to pay. And this is my living. So I'm not coming in here every day to try and play around with my paycheck, right? I don't want to just throw money away. That's not wise. So that's why I don't trade the non-farms. It's a crapshoot. It's a gamble. It's no different from putting your money on the table, closing your eyes, and then just turning around and being, okay, what happened? So, in my opinion, the best way is just to stay out. Is War Room done, guys, or is Charles still going? Beside non-farms, what other news do you not trade in? A lot of it will depend on what's going on in the economy, but stuff like ECB press conferences, FOMC statements / FOMC minutes, certain interest rate decisions I won't trade. If there's a chance of like a hike, like like New Zealand can cut anytime. The dollar, when we knew that the dollar was going to raise interest rates, stuff like that. But those are the main news events are the ones I'll play on the sidelines for. The rest of them I'll trade right through. All right, looks like War Room is done. Carlos says about my trading plan. I'll be trained. I trained my wife, so at the end of the day, she asked me if I had a good day, and I say no. Lost money. She just says, "Did you follow your plan? Did you follow your rules?" I'll say yes, and she'll say, "Then it was a good day." That's perfect. It really is. It really is process over outcome. It doesn't seem like it. It's against. I know it's against everything you've ever learned or thought. It's really about the process, and if you do things the right way, you gotta trust that your process will work. How many of you guys have just go to Danny, go to Twitter, go to Facebook. It's been all over there the last couple of days. I lost my train of thought now. I don't know what I was saying. Anyway, swing trading and day trading, just the time difference. Day trading is the shorter time frame. Swing trading is the longer term time frames. So day trading, you're looking at typically holding positions for minutes to hours. Swing trading, you're looking at hours to days, maybe even weeks. Does the wick on New Zealand indicate a further upside move? What time frame you looking on, David? Hey, Hey, no problem, Menno. This whole thing, you can always go back. This thing is recorded by YouTube. You can go back and watch it. No, normally I would say yes. This right here, and I'm actually gonna get short, guys, on the bat formation. Are we up? We're 8:45, so I'll get short here for our syndicate account. It's the non-farms. Again, a lot of times in non-farms, you see a big initial reaction. People are panicking and doing all this type of stuff. And then the market goes back to what it was normally doing. This is why I really don't like the news event, because what it does is it messes the charts up, and we end up basically right where we started, just with inflated ATRs and whatnot on there. You'll see this time and time again where the market will just do nothing. It'll do nothing. What am I at here? All right, there we go. There we go, short Kiwi. Nice. John says it usually ends up right back where it was and you collect premium. Yeah, and the brokers make a killing off of it. It's ridiculous, man. I really hate it. I hate it with every bone. Yeah, a lot of option. Yeah, a lot of option traders. I can't give advice on brokers. You want to do an ECN broker, I would say. I can't give broker recommendations though. I just legally I try to stay out of trouble. Ooh, that's a bad image. Charting software, I use NinjaTrader. I think it allows me to do everything I want. I think it's the best charting platform for the price. Stuff like eSignal is better. I've never personally used eSignal, but I know it has some advantages. You're going to pay a premium for that. If you're not looking to pay for anything at all, www.tradingview.com is a great site. That's what we were looking at, gold. They're starting to link with some brokers, so I think you can start to trade live. Maybe there's not enough data to perform back testing on there, but that's a good platform that you can use to, say, do your analysis and stuff like that. So I haven't used too many platforms, and I'll use TradingView from time to time. Most of my work is on NinjaTrader. I used something a long time ago called AccuCharts. And if you ask me about MT4, I'm going to tell you MT4 is not the best platform. They can't see what you're typing in live, members. I told you, this is the new me. I'm going to be nice. I'm not bashing stuff. I refuse. All about positivity, right? At the end of the day, here's what I say, guys. When you're looking at a trading platform, what matters the most is that you can efficiently and comfortably do the analysis that you need to do. I'm not personally a fan of MT4. I'm on 249. Hold on. What did I type in wrong numbers? I'm not personally a fan of MT4. But if you're a user of MT4, if you're comfortable with it, if you know all the ins and outs and you can navigate a chart the way you need to trade efficiently, there's nothing wrong with that. And that goes for any other, trade station, any other platform out there. As long as you can do what you need to do comfortably, that's all that matters. Where do you follow Charles live? Charles, he's been doing our war room meetings. We have a program called the Syndicate. It's kind of an entry-level program. It is $1 for the first month, right? So for you guys that aren't part of a syndicate, that haven't invested $1 in yourself, that tells us how serious you are. But each morning at 8:30, we do a war room meeting. So Charles was doing, it's a live meeting where Jason Stapleton, he's out for the week, but where we come in, we kind of tell you what's on our radar here. Hey, here's what I'm looking at. Here's what I got involved in. Kind of the process behind it. This is why I'm looking at this level, something of that sort. And just kind of give you an idea of what the reality of trading looks like day in and day out. And again, not just from an analytical standpoint of breaking down the markets, which we do. We share a few different trading opportunities through the trade floor, and I record some videos as well. But more so, it's to show you the reality of trading. You know, every trade that we take goes through that trade floor or comes through you through video format. So like I said before, you get to see us at our very best. You get to see weeks where Jason and I are just killing the market and we're chest bumping and we're getting rowdy and we're like, oh, we can't be touched. And then you get to see weeks where it's the exact opposite. It's like, hey, bought pound dollar. Oh, crap, stopped out. Sold New Zealand dollar. Oh, crap, stopped out. And things get really bad. And you get a chance to see how professional traders handle that. And we do get frustrated. And you guys need to know that it's okay. We get frustrated. We get angry, but we don't let it affect our trading. That's the big difference. You know, I'm having a horrible week. This is my worst trading week of the year. Yet I'm still in here. I'm still breaking down markets. We're still executing the plan. And it gives you a chance to see that consistency and what it really takes to be a professional trader. So like I said, it's $1 to sign up. Just go to our website, tradeempowered.com, click products and services, and Syndicate should be there. Here you go, Ian, if you're watching. You talked earlier about trading without a stop loss. Kenny says, bat formation just completed on the $5 range. Thanks for everything. I'm developing a trading plan, but I'm having issues removing subjectivity and find myself going back to the plan and editing it while testing it. Any advice? That's a good thing. You should be consistently testing your plan. Think of yourself like a scientist, right? When you're doing a plan, and there's a whole bunch of steps to it, but you have an idea, you have hypotheses, right? You test it, something else catches your mind, and you add something else. You add a filter, you remove a filter. That, and you keep doing that until you've got something that works. That's what Darren did with the cipher formation, right? For you guys that are not familiar, Darren Oglesby here at Trade Empowered, he is the founder of the cipher formation. Founded by accident. He was doing some testing on Gartley formations, and he found an occurrence in the market, and he wrote down some rules. He's like, well, okay, when this happens, this often happens. Let's see if this happens. And he'd write it down, and he'd look for some of it, and then he'd scratch some rules out, put some more filters in. Well, what if I wait for this type of extension versus this type of extension? Okay, that works. Okay. Went back, looked at it. All right, well, what if I make the maximum here? We can break above it, but we can't close above it because that eliminates this many losers. Go back, test it, and you keep doing that until you find the optimal way to trade your strategy. And it stinks. It's frustrating. You're going to get your significant other is probably going to take really weird pictures of you falling asleep at your desk. We had a trader that broke his keyboard. He sent me a picture. He broke the right arrow key on his keyboard from clicking his charts right. But if you do things the right way, guys, you have something that works. Not only that works, but something that you truly believe in. Because trust me, spending hours and thousands of hours in front of a chart, going through hundreds of thousands of setups, maybe going back and forth, entering all this data. By the time you're done and you've got it the way you want, you have a 100% belief in what you're doing. And we all know there's a triangle of belief, action, results, right? If you believe in what you're doing, that belief causes you to take the right actions. If you take the right actions, you often see the right results. And if you see the right results, what does that do? That gives you confidence. You're like, oh man, this is working. And that increases your belief even more. And then you have more belief, and then you take more right actions, and you get more results, and belief, action, results. And it keeps going around in a cycle of success. Problem is, many traders don't do the back testing. They don't go through that part of the process. They don't have the belief, right? So when things get shaky, they don't take the actions, they sabotage themselves. Then they don't get the results they want, then they get depressed. and it chisels away at their belief, and it gets lower and lower and lower, and then they slowly bleed out. Yeah, Darren invent the cipher. He'll never let you. He doesn't talk about it. Ian says 69 pip winner on pound dollar 5 range aggressive sell. Well done, Ian. Ian's one of our transformation members, so I know he not dare deviate from his plan, right, Ian? I know, Ian. I spent when Ian signed up for the transformation course. It was funny. He was so fired up about trading, right? That he came into the live room. He was like, Akil, I'm ready to go. He's like, I'm taking this, I'm taking that. I'm like, wait a minute, Ian. You just joined last week. And what do we always say? We say, when you're in the course, right, you need not even think about trading live, right? You're not even going to have a trading strategy until week 5. So I'm like, what are you doing in the market? And we just went at it, right? Yelled at him a few times, not yell, but, stern conversations with him. And he's like, you know what? Fine. I'm not going to trade anymore. I'm going to concentrate on my trading and learning. And he's been doing that. And I think he's been seeing results. I think he's been seeing results, which is good. Jason Greystone was the same way, Ian. I mean, he wasn't ready to trade, but we'd have some stern conversations. And I try not to do that with a lot of people. Transformation members, I will, because they're paying a premium to be coached. So, I can verbally abuse them as much as I want. But it's tough love. And it's tough love, but it certainly is love, because we want to see you guys get better. Let's see, I'm missing some questions here. Yeah, Darren invented cyber. Chris says, Akil, that Kiwi is going to end up double top, possibly on the 4-hour. No. Retest the structure, not a double top, though. All right, transformation members, you guys are blowing up the trade floor. Do we have a triple top on dollar yen 1 hour? Let's go down to 1 hour. Let's go down to 1 hour dollar yen. Yeah, and we're not going to live. Remember, we're probably not going to take a break today because we're streaming live. So we'll probably go for till 9:30 and then maybe call it a day. You have a double bottom right here coming out of retested structure. So if we're going to bring in our DSR levels, this would be a perfect example. We're bringing a 240 DSR level here. Red and green, 240. This is actually not a bad place. Again, the non-farm spike kind of messes everything up. Come on. You can see we're right in that DSR zone here on dollar yen. It just stinks that we had this big old move and then the market said, whatever. And if you're a pattern trader, if you go down to the lower time frames here, right? Let's go down to the 5-minute. There's a busted out, looks like a busted out bat formation that happened during that non-farm release as well. Look at that. Swing high to swing low. Looks like could be a Gartley actually. See, that's why I love this thing, right? The pattern assistant guys, check this out, right? Is this a bat or a Gartley? I'm too lazy to draw the fibs in, so let's just see. Cipher, cipher or bat, Gartley must have crossed the 618. Boom. Did we get a lower low right here? We did get a lower low, so that would have invalidated it. Good. That wouldn't have been a trade that you guys got caught in. But yeah, you got a double bottom and a retest of previous structure support. You have a DSR level down there as well. Just keep in mind, this type of formation typically breaks to the downside. I forgot who asked this question. Remy. This type of formation typically breaks to the downside. And you do have, this is what stinks about this. If we had a secure level of support right here, this would be golden, right? You know exactly where stops need to go. But because we have this wick here, right? If you want to get involved, aside from say on a lower time frame with like a conservative entry, where would stops need to go here, guys? Yeah, I'm just using it as a perfect example. I'm sorry, I'm not even showing you guys my chart on YouTube. Sorry about that. We'll get back to that. Apologies. I'm a bad multitasker. Where would stops need to go? Because where could we reverse? Yeah, stops would need to go below here because of that dumb wick. They'd have to go below 98s. They'd have to go below 98s because we can easily get something like this and rally up because we've tested these levels before, right? So there's nothing saying that, hey, if I have a stop loss right here, it doesn't really offer me that much protection because we've tested it before. We've broke that level before. It would have to be below the low of these wicks here. But if you can find something on a lower time frame, range bar chart or a 5-minute chart, will give you a much lower risk. But typically, you see a breakout to the downside, so I wouldn't be surprised at all if we saw some more bearish movement here in the end. Please tell the difference between a strategy and a plan. They're very similar. A strategy is what you're actually using to execute trades in the market. So like a MACD cross would be a strategy, or like a moving average cross would be a strategy. That's your strategy. You trade it every time the moving average crosses. A plan is your trading plan. So it encompasses your different strategies. It encompasses your philosophy, your money management, your rules on position sizing, your rules on news trading, your trading routine, stuff like that. So think about the strategy as like the actual. If we put it in sports rep, like a football game, right? The strategy would be the actual play, right, or the defensive formation. All right, the plan would be the entire game plan for the game. So the strategy is a small part because there could be different strategies that you use. Does Akil mostly trade off the hourly? No, I'm both a swing and a day trader. So I go from, I don't the day chart is my higher time frame for top down analysis, but we haven't done any today. But when I do my top down analysis, the daily chart's my higher time frame for my swing trading, and then I'll trade off to the 4 hour and the hourly for my swing trading. For my day trading, I'll use the hourly for my top down analysis, and I'll trade mostly on the 5-minute and 5 range bar charts. Oh, France put in a heck of a game. Germany was destroying them in the first half. Then the bad handball, and that flipped everything. Bad handball, and that flipped everything. I thought they played a brilliant second half, though. And let's not forget who called France to win it all when it first started. Don't forget. Don't forget who called it. They still got to beat Portugal, but I don't think Portugal's that good, to be honest with you. But let's not forget who called it. This is the only thing I've been right on all week. You got to give me this. I should stop making fun of myself. People that are new they're gonna think like, man, this guy's a horrible trader. Look at that, breakout to the downside. That little guy is good, and he does the Drake dance when he scores, which I adore. All right. What other questions you guys have today, guys? Again, I have no interest in trading the market, so it's, if you have a specific pair you want to take a look at and go through, let me know. If you have any questions about anything, let me know. If not, I'm ready to call it a week. Portugal has Luck and Ronaldo on their side. So for your systems, 5-10 minute is best. Aren't you stopped out a lot more? No, I never said 5 or 10 minutes is best. You guys got to stop putting word into my mouth. I see so many rumors, man. Come and trade with me. You'll see exactly how I trade. He only trades advanced pattern formations. He only trades supply and demand. He only trades on the 3-minute time frame. He only trades between 10:15 and 11:15 every day. Where do these rumors come from? Can we look at the breakout to the downside as a trend continuation if it closes below? Yeah, you can, but the problem would be here, Remy, right? If we're taking a trend continuation to the downside, right? If we want to get bearish, right? We're looking for bearish targets, right? Am I correct? Right? If we're getting bearish, we're saying the market's going to go down. All right. The question for you is, and we always want to ask ourselves, there's a difference between just having a quality trading opportunity and, a trading opportunity that we actually think can follow through. The question I would have is, where would targets go? Is there any place on this chart that we can confidently say, I think the market's going to go here? So typically, yeah, this would be, you look for the breakout, you look for the retest, right? The pullback, you get short on the pullback, trend continuation, trade to the downside. The question here is, where's the market going to go? Where can I put targets after this? That would be my one concern with this trade. Does that make sense? Hey, well done, Yusuf. I'm a day trader and a swing trader. Portugal has broken support. Yeah, so you see, like can I say that target at a price action is going to go here? Can it go here? There's no real aiming point because of this whole, the whole Brexit mess still kind of messed this stuff up. There's no aiming point. Now, if this were different, if this were, say, previous structured support like that, and then we rolled up on some normal price action, it wasn't just wicks there, then yeah, you can easily say, hey, I'll bring in a Fibonacci extension, look for a 127, swing high to swing low. 127 should line up right at that level. Boom, take targets right at 99.27, right at previous structure support. But the Brexit wicks kind of make everything funky for us. So the right concept of looking for a trend continuation, if you get that break and close below, just in this particular scenario, it's hard to find an aiming point in my opinion. I would find it hard to find an aiming point. My plan states to wait for 618 retracement, then targets are the lows if the risk reward is 1-to-1, or else don't get involved. I think we're talking about two different things then, but you're talking about waiting for a breakout below this descending triangle, right? Or something else. Yeah. So if you get a breakout below this descending triangle, right, so you're saying you would do something like this, wait for the breakout, bring in your Fibonacci, look for a 618, and then take targets down here like that. Okay. Yeah, you could. Yeah, nothing wrong with doing that then. All right, I see Ian typing in. We're gonna get ready to shut things down here. Live rumors, get your questions in if you have it. Why is Euro not working for me? Nothing important. I'm having some charting issues. Great day to have charting issues. If you're gonna have it on a day where you're not trading anyway. Yeah, what's going on here? Probably the running of like 80 things at once. That's what it's got to be. All right, yeah. So we'll get ready to close down shop. Let me see if there's any. If you guys have any questions, live remembers, just get them in right now. And let me just see if there's anything I missed here on YouTube. I think I killed that trade yesterday on pound. Yeah, you did. You jinxed it. I was very mad at you. You got all excited about our pound yen trade, and then it went against us. At least pound dollar won, but the pound yen was a bigger loss. That was like 63 pips on that. Pound dollar is only like 40, I believe. So the Kiwi is testing previous structure high, but not considered a double top. I don't know why I'm having issues with this. Help. Um, Save it for Monday, Chris. For Monday's training. That's the perfect time. When we have our transformation training, save it for that day. We can go in there. We can kind of discuss it. I think you're just having issues with. I think you're just seeing every. I would say this is your problem, an issue. I think you're just seeing every test of structure being a top. So let me know if I'm wrong. So you're seeing the market do something like this, right? And then come here, and then come here, and then do that, and do that, and do that, and then saying boom, right? Would this be a double top to you? That's my guess. Yeah. See, the double top, you're looking for that. You're looking for that test and that retest of previous structure. So this wouldn't be a double top. This would be a retest of structure. Why? Because price action created a top right here, right? We rallied off of it. We've created a brand new trend to the downside. We've dilly-dallied around for a little bit, and then we came up to retest it. Now, maybe on like a much higher time frame, this is just a simple retest, but this is a retest of structure. A double top would be this: the market coming up, showing that we touched this level, reversing off that level, putting in an immediate second touch, creating that V, giving us that open space in between, and then rallying off. So it's the test and the retest. But every move is not a double top. And it's you can still look at it as structure trading. It's the same thing. It's resistance, however you look at it in this case. I just think the terminology, we're just on different pages with that terminology. Yeah, you're looking for the market to test structure, put in a brief retracement, and put in a retest. So think about it like this is gonna be a bad example. A boxer that gets punched in the face, stumbles back, and then runs in for some more, versus a boxer that gets punched in the face, takes a 3-minute break, comes back the next round, and then wants some more. You want to see that visible V inside here, right? This is a retest of structure, which is fine. This is a good thing. You want to see retest of structure. But again, yeah, you can't see, it's not going to be something like this where the market does that, comes up, and then, this is not a double top. That's just going to be a retest of structure. Still powerful, still usable, still tradable. But that's not what we classify a double top. And here would be your double bottom right here, if you can see it, the immediate retest. Test, retracement, retest. Just go back through the lessons and just look for the examples that we pick out. Look at what they look like. They're those immediate tests. And again, we can talk about it. We can go through it more in detail if you want. Remind me on Monday's session if you're still having issues with it. Jay says, learn us something, not this BS. Jay, you can leave if you want. You don't have to be here. This is free. So, if you don't want to stay and talk and get some free information, then you can go. I would agree. Let me ask you guys this. Is for you guys on YouTube, type in a yes if you found this informative. You see, it's those type of people that end up failing. I hate to say it, and I'm not supposed to respond to the negative comments because I try not to let negative energy, right, enter my life. But it's people like that end up failing. People like Jay want the shortcut. That's what they want. They want to come right in. They want to kill. I don't care about how to read a price chart. I don't care anything about trading psychology, philosophy, setting up a trade plan. This is all stuff we talked about today. I don't care about any of this stuff that actually makes you a consistently profitable trader over time. Just give me the magic pill, right? Give me the magic pill that I can use right now and I could become a millionaire in 5 years or 5 months, maybe. That's what people like that want. And guys, I've been working with traders, right? I've been teaching. When did I start coaching? I started coaching traders back in 2012, right? This is my 4th year doing this. I've worked with traders from over hundreds of countries. I've seen many that have gone on to be very successful. I've seen many that have gone on to fail. The biggest difference between those who go on to find success and those who fail, the successful traders master the little things. Yes, they have a plan. Yes, the plan has a positive expectancy, meaning it makes money over time. But they've mastered the little things. Setting up a trade plan, setting up a routine, working on their trading psychology. They understand, working on how to take losses. They understand that it's not a get-rich-quick scheme. The ones that fail, they're the ones looking for the magic pill. So I wish you the best of success, Jay. And I hate calling you out like this, but it just, I hate seeing comments like that. And I don't hate it because it offends me. I don't care. We've got I don't know how many people watching this right now that are enjoying it. But I just know that with that attitude, it's going to be a struggle. So you're going to have to make sure, you want to change that attitude. Yes, you need a strategy. That's good. Right? But make sure you don't just disregard the small things, Jay. Those are the things that's going to make you consistently profitable over time. He says, all right, little racial slur in there. I'm a profitable trader. Don't worry. Okay. Let me ask you this. Why are you here then? Why are you here? Why are you here? I love that, man. I'm a consistently profitable trader, so don't worry about me. Why are you here? More so, not even why you're here, because we have many consistently profitable traders that are joining us. Why are you typing in stuff like that? I'll tell you what, I attend webinars, right? We have many members of our live room that are professional traders. Some are teachers, some work for prop firms, right? Some of you right now watching on YouTube are very successful in your own right, right? Here's the thing. Do you guys type in, say, how come you're not teaching me anything of use? No. No. That gets me every time. I'm this great trader. Why are you spending time watching me then? Let's do a trade-off. I will embarrass you. No, feel free. You got it. I'll give you the victory right now. I'll give you the win. I don't get paid to trade against other traders. Guess what? I get paid to execute my plan in the market. That's how I collect my paycheck. Right? I don't trade for rankings to say, hey, I'm the best trader in the world. I just want to make a little bit of money consistently in the market year over year. That's all I want to do. I don't need to be the best. I don't need to challenge you to a trade-off and so that we can see who's the better trader. Because guess what? At the end of the day, guys, does it matter who's the better trader? Roger, does it matter if you're better than Phil? Phil, does it matter if you're better than Lax? Lax, does it matter if you're better than John? No. All that matters is what? That we can be consistently profitable. Hey, take care, Danny. And again, this is a great example for you guys that want to see the difference in mindsets between a professional trader and the other type of traders out there. It's a different breed. All right. Anything else, guys? Man, it's been a while since I replied to a hater. That felt good. It's been a while. You guys have been with me for. I used to do that all the time for you guys. Who used to be with me. I used to take the YouTube comments and respond to them and get all angry. I just cut it out because it was pointless. So that felt kind of refreshing. Brought me back. Got me a little fired up. I love it. I love it. All right. Let me just make sure. I know there's about a 20-second delay here. Da, da, da. I don't see anything on YouTube. This isn't a game; it's a career. That's a good comment, Clark. It's yeah, it's true. There you go, Ian. There you go. You got your rant. All right. So I'll see you guys, transformation members. I'll see you guys Monday. Live members, we'll be back on Tuesday. Thank you guys for hanging out with me. This whole thing should be, YouTube should produce it and record it whenever I stop it, I guess. So if you want to rewatch it, it's going to be up there. If you're new, feel free to subscribe. Again, we're putting all of our traders here at Trading Power. We're going to be under the same YouTube page now. So Jason Stapleton, Jason Greystone, Charles Miles, and myself, we're all going to be under this YouTube page. So make sure you're up to date and checking out these videos. Until next week and until next time, plan your trade, trade your plan. You guys have a great weekend. Take care.